future. It's finally here for the mortgage industry. Don't blink, this is gonna happen fast. And I know fast and mortgage aren't terms that normally go together, but they're about to. The digital mortgage revolution is here, and the change will seem to happen overnight. And when it does, the industry's efficiencies will increase tremendously. Now, I was in Miami last week talking with some of the industry's smartest people, and RC was in San Francisco masterminding at the first ever digital mortgage conference. We learned a ton, and both of us came away super excited for the future of the mortgage industry. Right now, it takes on average 40 days to close a loan and costs a lender over $8,000 to complete the mortgage process, which by the way is full of pain points, as we all know. Let's be honest, it's been tough to be a home buyer post Dodd-Frank and TRID. From just thinking about a home, to budgeting for a home, to finding a realtor, to finding a lender, preparing your financials, to approval, to appraisal, to inspection, to final approval, to closing, and finally moving in. It's a roller coaster of time and pain, but that's about to change with the entire industry racing to offer a digital mortgage. Now, Quicken and Rocket set the pace, and they're already off and running. Since their Super Bowl ad last year, they have had 11 million visitors, and every 34 seconds, someone registers on their app, and every 9 minutes, a consumer completes a loan app, closing $5 billion in Rocket mortgage loans since their release. Now, this isn't a Rocket mortgage commercial, and Rocket isn't the end-all be-all. They're just the first to offer a true digital mortgage. And there's positives and negatives of a digital mortgage. Here's one of them, and a big one in my opinion. The digital mortgage process will speed up the process itself. But the process isn't everything, and in my opinion, automation can be the Achilles heel for the mortgage company that is tech-heavy and relies on a consumer direct model. Let me explain. Yes, a digital mortgage process will speed up the process, but the process still relies and will continue to do so on an experienced, licensed mortgage professional. Mortgages are complicated and they don't originate themselves. And while the loan process may be in the process of being streamlined, please don't take this to mean that you don't need a great mortgage professional to guide you through said process. Computers can't figure out the one-off situations. They can't figure out what to do when you don't have a perfect borrower, which we all know is hard to find. Sometimes loan officers have to help with job loss and or changes and overdrafts and large deposits, income, and the biggest one, finding and explaining what is the best mortgage for you, and do you actually understand what you're signing for? After all, it's a massive debt that you're asking to take on, and it will take you a third of your life to pay off. So financial literacy in and around this process is more than needed. It's imperative, which brings up another challenge for the digital mortgage revolution. I call it the Apple effect. Let me explain. If you think an LE and a CD form truly explains the massive debt we just talked about, you are crazy and ill-informed. And if you think digitizing said form with an e-sign option promotes financial literacy, you're even crazier. Apple made it easy for us to attest and agree to any of their terms and conditions. We just scroll to the bottom of the 17 pages of Apple disclosures and we click yes, I agree. But you know as much as I do, we have no idea what we literally just signed. I probably just gave my kids away. I have no idea. And that's what we are implementing into the mortgage industry right now. Don't get me wrong. I love e-sign, but you are again crazy if you don't think the Apple effect will take hold in the digital mortgage world, thus promoting the opposite of financial literacy. Now, in my humble opinion, and I'm going fast, this is where I think we should slow down, and implement some measures to ensure our consumers really do understand what they're signing for. A click of a button does not ensure that. Let's not forget one of the major driving forces of our last meltdown. I didn't know what I was signing. I didn't understand what a 228 or 327 meant. I didn't understand what stated meant. I love all this progress for the industry, and I'm all for the increased efficiencies for everyone. Let's just do it right and make sure we don't accidentally implement the Apple effect into the mortgage industry. I could go on forever on this topic, and we'll probably do so in the coming weeks. I've highlighted a few of the good and the bad points in regards to the digital mortgage. Chime in below and let us know what you think the positives and negatives are of the digital mortgage, and we'll see you guys next week.